You are listening to chartingwealth.com for Friday, the 30th of October, 2015. We always start with IYY, which is a total market index fund. It tracks the entire stock market. We can see that it is a long-term uptrend. When we say long-term, we're looking at our two-day chart. That's the way we always start. We're above our two-day trend line. That's been a good trend line so far. Our moving average convergence divergence indicator, the big one that we really pay attention to, is up. Our derivative oscillator is losing a little bit of energy. On our charts, those are shown as light green boxes when the market's going up and red boxes when the market's going down. But we're continuing to climb. Technically, the market was down 0.08%, so that's 0.8% for the day. So pretty much an even day. When we look at our charts, of course, we see the two-day candles, which are green open boxes in the Heikin Ashi type of candlesticks that we use. I'm going to do a teaching on that soon. I've been promising it for a while, but again, you can look that up. It's Heiken dash Ashki, A-S-K-I, I believe. I don't have it right in front of me, but you get close to that on Google. You'll find it on Investopedia. And again, I am going to do a teaching on that. But the market is up, continuing to go up on the long-term chart. If we go to our 4-hour chart, we can see that we crossed over going up back on the morning of the 28th of October, and it's continued to climb, although we do see, when we look at the wicks on these candles, we see that the market appears to have been hitting a point somewhere around 104.70. It's important to pay attention to see if that's where the up move is going to stop, or is it just digesting and going to get to moving again. We have the short chart and the long chart paralleling each other as far as up moves go. That's where we are in the total market. Now, let's drop down and look at the S&P 500 as represented by SPY, another exchange-traded fund. It looks most days similar to IYY because it's 500 big stocks, that a lot of volume in the market. And we see that it is continuing to move up above the blue two-day trend line that we have drawn. We crossed over about the same time, moving up around the 5th of October, and it's continued to move up. And as we revert to our 4-hour chart, we can likewise see it was down 0.03%, so pretty much even for the day. But we can see that it crossed over and did not actually, it crossed over quite a while further back than the total market did back on the morning of the 23rd of October, and digested some of those moves and then started moving up again in the afternoon of the 28th on through the 29th. And we can see from the type of candlestick chart we're using that we have open green boxes, which means continued movement up as far as the candlesticks go, although we do see a converging, a coming together. So again, with that topping out, we just have to be careful and watch what's actually going on with the price movement. Don't have a crossover confirming a down move yet on the 4-hour chart, and we are in a strong up move on the 2-day chart. Pay attention. Continue to watch what's going on. Take your profits on your virtual trades when it makes sense. Now, lastly, let's go back to our 2-day chart. Let's take a look at the Qs. The Qs are the technology stocks. Remember, they've been running up rather nicely lately. They were down technically for the day 0.16%, more than, of course, the total market and the S&P 500. A strong crossover going up on the 5th of October has continued to move up. Only really one day of hesitation, one 2-day candle of hesitation on the 21st, and that was still an open red, not a solid red box with down movement in a wick, but an open red box with up movement with the kind of candlestick charting that we are using. That again shows you a nice strong trend going up. Is that trend petering out? Well, let's look at our 4-hour chart, and of course we see some of the same things as far as the up movement goes. I'm going to pull our Bollinger Band down a little bit, and we can see that Actually, we had the parallel today about the high that we saw back in the afternoon on the 28th. And when I say today, I'm talking Wednesday the 29th, about 114.05. So we want to pay attention to that. We do see a converging, a coming together of the MACD and the signal line. It's getting closer, the blue line is, to crossing over on the red, so pay attention. That up move, at least on the short chart, could be coming to an end, particularly when we have this hanging price movement over a 3-day period. So, I'm sorry, actually 3 half-day period, which is a day and a half. So continue to pay attention and watch. That could just be digesting, getting ready for some more up movement, but pay close attention. All right, that is where we are on our 3 indexes. Now let's go to gold. What's happening with gold? Well, of course, it crossed over the 2-day trend line back on the 23rd, that 2-day candle, and has continued to move down. We have somewhat of a spinning top there for the course of the last 2-day candle. But what do we use to really trade gold? Well, you know, if you listen to the podcast much, we love our 4-hour chart, and look how prescient it has been. Crossed over going down on the 19th of September. I'm sorry, the 19th of October, and has continued to move. A couple little up days of movement, then a nice down move until about the 26th. Then a little bit of a kick up, but never enough to cross over to get you out of that down trade. And then, of course, it moved back down substantially over the course of Wednesday, with substantial down movement in gold, bottoming out somewhere around 109.72, something like that. So again, if you had done yourself a virtual trade in an inverse gold fund, you were doing quite well and feeling really, really good. So hopefully you are continuing to love this chart. It is a great chart so far. Now, how long is a good chart? How long is a chart good for? Until it's no longer good. So we'll continue to pay attention and watch what's up with gold. We'll also be looking for any kind of floors that we might run into on gold, and we may be close to one. We can see sort of a top on gold somewhere around 108.72, something like that. So who knows? That could provide some resistance, but we'll just have to keep an eye on it. Maybe it will, maybe it won't. Anyway, thanks so much for tuning in to the podcast today. If you don't have the kind of layout that we use, provided by freestockcharts.com layout, it is our layout. We'll be happy to send that layout to you. It's just a link. You hit that link, it pops up Free Stock Charts and loads up our layout. So you can trade, do your virtual trading on the same type of layout that we use. In addition, you can also ask for our 15-minute how to read a stock chart video. We'll send that link to you for free also. Easy to do. You just email us CW as in Charting Wealth, CW@chartingwealth.com. Thanks so much for listening. Hope you've had a great week investing. That is virtually investing in the market. This is all about training. We don't call stocks. We're not a stock calling service. We're an education company, and we hope that we are helping educate you so that you can learn to do this on your own and make your own decisions. From chartingwealth.com.